Let's move on and talk about markets. It's a special segment, Charting Trends, and we have Sacchitanand Uttekar, Associate Vice President, Technical Equity at Tradebulls, who's with us. Sacchitanand, great to have you with us here. Good morning. Are we at a bit of a critical juncture, or this is one of those pauses which, will last 2 or 3 days and then the move, sort of upward move begins again? Apart from sort of classical indicators like RSI, etc., which of course are screaming overbought, there are no real, big. The price itself is not telling you, it's not broken anything to tell you that there's a big move down coming, even short-lived one. What's your sense?
Good morning, Prashant. As you rightly pointed out, markets are looking a bit overbought when we look at the daily structure. In fact, yesterday itself, we saw a doji kind of formation on the Nifty. It was an inside bar, and plus the call writing at around 21,000 was significant. And that's why I think, the market is taking its time to surpass that particular level. But on the lower side, I think at least for this particular series, the floor is well set at around 21,000. 21,070 would be a dependable stop loss zone below which probably we may see the trend structure, getting changed. But as of now, I think there are no major signs of any major distortion. Probably after a very strong run-up of almost 12 to 10% without any major time and price correction, that's why I think there is some fatigue which may come in. But overall structure is looking very healthy. In fact, if you remember on this particular show itself, at around 19,800, we had indicated one particular setup on the ADX, on the monthly ADX, which actually gave us the confidence that Nifty could stretch its legs towards 21,400. So that particular level has been achieved today. The level has been achieved way too early. In fact, we were anticipating that this particular move may unfold in the end of December, January kind of a legs. But I think the structure itself is looking healthy. The flow has been very consistent. All we need is a meaningful correction, time and price wise, and that's why I think the trajectory on the higher side, still looks progressing. On the upside, we are anticipating that eventually Nifty could scale towards 22,240, probably in few months itself. And if you look at a trading momentum play, then I think a pullback towards 21,210, 240 is necessary. So as of now, I think it's a good, healthy trend. All we need a consolidation or a correction. The support is well established at 21,000. The base is very strong there. So unless we don't slip below that particular base, there may not be any major change in the structure.
All right. On individual stocks, what are you looking at, Sacchitanand? Good morning. Where do you see more traction on the upside?
Well, if you look at the sector plays, clearly IT is something wherein we are, seeing a good progressing trend here. Nifty IT on a relative strength basis has actually moved, surpassed its April 2022 and December 2021 highs. On the price, there's a fair amount of upside which is yet to be seen. And we are anticipating that eventually Nifty IT itself can move towards 36,600, 39,000 kind of levels, and it could surpass those all-time high levels as well. So I think a decline during this particular phase of the market is necessary, and we are comfortable, building long positions here. Coforge is one particular stock that we have recommended to our clients. If you look at the overall structure, the stock has breached above its life high zone. And if you look at the overall structure, it looks like a classic rounding bottom formation on the monthly scale. Now, this particular breakout has happened significantly with volumes and price action, and that's why we are expecting that going forward, from a portfolio perspective, the stock can be accumulated with a stop loss at around 55.80. Eventually, we see this stock scaling towards 76.60, followed by 8400. The other stock on our radar from a trading momentum basis from the same space is Wipro. Even here, if you look at the structure, recently the stock managed to give us a rounding bottom breakout at around 445, 440 levels. There's a good, strong pullback which is necessary. This particular pullback, which is evolving right now, can get arrested up to around 435. So on a decline, the stock can be accumulated for a price target of around 490, keeping a stop loss somewhere close to around 428.
Okay. Sacchitanand, great to have you with us here. Good conversation as always, and we'll watch out for some of these stocks and, of course, your overall view on the index as well.